Tesla, the electric vehicle and clean energy firm created by Elon Musk, has captivated the imagination of investors all over the world. Due to the phenomenal appreciation that its share price has experienced over the years, many people are becoming increasingly intrigued by the prospect of using Tesla as the principal vehicle for reaching early retirement. There is no doubt that some companies, such as Tesla, have the potential to generate big profits. However, in order to decrease risk, it is vital to diversify your investments. Consider the case of Apple, where an initial investment of only $3,000 resulted in a return of more than $1 million. Today, we will talk about how to retire on Tesla. How many shares are needed? Acquiring an understanding of the presumptions. Before we go into the more practical implications of retiring on Tesla shares, let us take a moment to outline the fundamental assumptions that are guiding our discussion. In light of the fact that we are aware that diversity is an essential component of any strategy for socially responsible investing, we've decided to focus solely on Tesla stock. The goal amount for retirement is $1 million. Be aware of the fact that this number might shift dramatically based on the specifics of each investor's situation, despite the fact that many investors have it set as their objective. The difficulty in making predictions and using spreadsheet models. The process of financial planning frequently involves the use of spreadsheet models and intricate computations. However, attempting to forecast the behavior of the stock market, particularly over extended periods of time, is loaded with risk. Even while some investors might show convincing spreadsheets and figures, the reality might be very different from the projections. A spreadsheet is incapable of predicting unforeseen events like as unexpected inflation, changes in government policy, corporate choices, or fluctuations in market sentiment. Because of this, it is critical to exercise extreme caution while placing one's complete reliance on such instruments for long-term financial planning. How many Tesla shares do you need? As a result of inflation and the general rise in the cost of living in most parts of the world, becoming a billionaire is arguably the easiest method to ensure a comfortable retirement for oneself. Let us say, as a general rule, you require $1 million worth of Tesla stock. If you require at least $1 million within the next 7 years, then the first thing we need to do is determine what the possible price of Tesla stock in 2030 is. The compound annual growth rate of TSLA shares over the past decade has been an outstanding 61%, which is far higher than the CAGR of either the Nasdaq or the Standard & Poor's 500, which is 11%. Let us say that Tesla achieves its lofty goal of producing 20 million electric vehicles by the year 2030 and maintains its current compound annual growth rate of 60%. This indicates that TSLA stock might trade close to $5,000 by the year 2030, giving it a staggering market valuation of $17 trillion. The risk associated with individual stocks can be reduced by diversifying holdings across a variety of asset classes, industries, and geographic areas. If you have a diverse portfolio, you have a better chance of surviving market downturns without having your money totally wiped away. If your assumptions turn out to be incorrect, having sole reliance on Tesla precludes any possibility of course correction. In addition, the sum of $19,000 that will be invested may not take into account any additional payments that will most likely be required. Depending on the state of the economy, it is possible that returns over a period of 13 years will not beat inflation at the level that was projected. Contributions made on a consistent monthly basis towards the objective would provide more assurance. In spite of the fact that retiring overseas on $500,000 is not impossible, it is important to exercise reasonable prudence before betting a significant portion of one's retirement savings on a concentrated stock bet almost 10 years in the future rather than on a diversified portfolio that is built up via regular contributions. There is a limited degree of predictability. Is it possible to retire with less than $1 million worth of Tesla stock by the year 2030? Annuity.org estimates that the median annual income for retirees in the United States is approximately $47.500. That works out to a minimum of $4,100 a month required if you want to enjoy a comfortable retirement in a Western nation like the United States. If you now reside in another nation or intend to retire in another country, you may be able to retire with a significantly lower amount of money. Many people in the United States decide to spend their retirement years in other countries such as Panama, Mexico, Costa Rica, Portugal, or even Thailand so that they can take advantage of geo-arbitrage and make their funds last for a much longer period of time. Let us assume, however, that you intend to stay in the country where you are now living and that you require a minimum of $4,000 per month in order to retire in luxury. If you want to be able to retire by the year 2030, the bare minimum amount of money you will need is going to need to be around $50,000 after adjusting for inflation. In order to achieve an annual income of $50,000 during retirement at a normal withdrawal rate of 5%, you will need at least $1 million in your investment portfolio. If you keep spending 5% of your retirement savings each year, your money will last you for 20 years after you stop working, assuming you get no additional income after you retire. While investing in Tesla may seem like a sure bet given the company's past growth and future potential, relying solely on its stock performance for long-term retirement plans carries significant risks. While Tesla shares have undoubtedly increased in value substantially in recent years, projecting this rate of growth to continue until 2030 is questionable for several reasons. Firstly, predicting stock market movements, especially over extended timeframes, is an imprecise science. Many factors beyond a company's direct control can influence its share price, such as broader economic conditions, geopolitical uncertainty, and shifts in market sentiment. Even very successful companies can face downturns in their stock if macro headwinds arise. Secondly, Tesla will not continue growing at unprecedented rates indefinitely. As the company expands, the law of large numbers means it will get more difficult to replicate the growth of past years. Sustaining triple-digit growth rates over a decade is unprecedented for a major public corporation. Thirdly, competition in the electric vehicle market is intensifying rapidly as more automakers unveil EV models. While Tesla still leads the sector, the increased rivalry could impact its future market share and financial performance. Rather than relying solely on speculative stock price projections, a more prudent retirement planning strategy would involve diversifying savings across different asset classes like bonds, funds, real estate, and protected income products. This reduces overall risk by preventing the portfolio from living or dying by the fortunes of any single company. While Tesla may indeed continue rewarding investors, basing an entire retirement plan around this assumption leaves too much to chance. A diversified approach is safer for long-term financial security. If you want to retire early as an investor, our number one recommendation for a stock is Tesla. There are a lot of people who are bullish on Tesla because they believe in the company's goal of a planet that is cleaner and friendlier to the environment, and they also want to retire rich as devoted Tesla shareholders. If you are getting close to retirement and want to invest in the greatest electric vehicle stocks that provide the maximum upside, then my number one recommendation for you to consider is Tesla. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.